Tesla's in I think, an interesting position right now. The EV market is likely going to rise, but perhaps not as aggressively as we had originally thought. So Tesla is still well positioned to capitalize on that.
They grew volume 20% and revenue only grew 1%. Well, the street might panic when they see that, but the reality of it is that's by design.
Let's give Tesla credit where credit's due. They've just posted not one, but 3 consecutive great years.
Long-term thesis, but we remain firmly bullish.
All that and more. So let's get to it. Closing bell on Friday, Tesla stock finished in the positive. Not by much, mind you, but in the after hours, Tesla is still up, sitting at about $184.08 per share. For the week, Tesla stock is down over 13.5%, and for the month, Tesla is down almost 30%. Going back an entire calendar year, Tesla stock is up just a little over 13%. Now, before we get started, I kind of want to separate the two issues. One is Tesla the company, and then the other is TSLA, Tesla stock ticker. The easy correlation to determine the success of a company is to look at the ticker and see whether or not it's doing well. Think of it as the pulse of the company. Now, for well-established companies where the market has figured out their business model and what they intend to do, this could be an accurate indicator. But oftentimes, especially if the stock market is confused on what the company is or does, the indicator could often lead to a misdiagnosis.
What most notably on the demand front should everyone be remembering now that kind of sets the tone for the rest of this year?
Tesla's in I think, an interesting position right now. The EV market is likely going to rise, but perhaps not as aggressively as we had originally thought. So Tesla is still well positioned to capitalize on that.
Why is that? Maybe it's because Tesla's going to continue to produce as many vehicles as they possibly can, while everybody else that are building battery electric vehicles are finding out that it's not as easy as Tesla makes it look, forced to scale back on their production due to their inefficiency at building the product. Yeah, there's a slowdown. But it's not because of Tesla. It's because everyone else is struggling to make high-quality battery electric vehicles and still turn a profit.
But as you can see by the earnings call, they're not immune to the many challenges that automakers face, that traditional automakers face. They've seen pressure on margins. There's always going to be demand for Teslas, but what we're seeing now is many of their products are actually starting to get dated. They need to do refreshes. So in some ways, some of the shine has come off Tesla, perhaps from maybe 2-3 years ago, 4 years ago. They were truly a disruptor. Now I think they're very, sort of a standard car company. We saw that in the earnings call this week.
Remember earlier when I was talking about misdiagnosis? Tesla's just an ordinary auto company. They need product refreshes. 4 years ago, they were hot. Now they're stale. I guess the Model Y being the best-selling vehicle on the planet is a sharp indicator of that narrative. And look, Tesla does do refreshes. They refreshed the Model S and the Model X. They refreshed the Model 3. And right now, they're going through the refresh of the Model Y. Regardless of the exterior aesthetic, a steady stream of over-the-air software updates not only fix problems that may arise within the vehicle, but deliver subtle improvements over time that makes the car feel brand new. This is unique to Tesla. No other car company is doing as many over-the-air software updates as Tesla is doing.
And when it comes to the stock price here, especially when you take into account the sell-off that we have seen this year, Matt Maley over at Miller Tabak pointing out that, hey, maybe Tesla is becoming a bit oversold. Will, I'm curious how you're evaluating the recent moves that we've seen in Tesla from an investment standpoint and whether or not this could be a good buying opportunity here for investors.
I think it is a good buying opportunity. I think Tesla's on sale and people should be paying attention. I don't think Tesla plays the same game as traditional car companies, and people have a hard time valuing Tesla because they don't know, should I value it as a tech company? They have AI, they have self-driving tech, they are innovating, their supply chain and their manufacturing processes, or should I value it based on how many cars were sold last quarter? What their revenues were. When I look at Tesla, they grew volume 20% and revenue only grew 1%. Well, the street might panic when they see that, but the reality of it is that's by design. They're trying to push volume into the market. They're trying to become the ubiquitous player in the EV marketplace, and they're trying to make their processes most efficient so that they can spit out chassis as fast as demand warrants.
Ding, 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 ding. Tell him what he's won, Johnny. Your mother right. That guy gets it. I agree with everything he just said. The stock price is indicative of a misdiagnosis. Tesla is choosing to lower their revenues from a position of strength. They are one of the only companies that make any money off of every battery electric vehicle sold, taking advantage of their industry-leading margins when it comes to making battery electric vehicles. It's a testament to their manufacturing process, which they continue to improve over time. TSLA may make Tesla look like it's on life support, but it's a misdiagnosis of the vital signs.
When we think about, Will, ultimately how that translates through to what investors should expect and the kind of appetite or propensity for investors who this week have seen shares move lower, and some of them saying for an environment where buy on the dip is once again kind of rearing its head as a theme again, is that the case for Tesla?
Well, I think people should be buying this dip. I think that people should look at owning Tesla as owning the most efficient car company of the next decade. I think there could be a world in our future where F-150 Lightnings are built with Tesla batteries or on Tesla chassis. I think there could be a future where Tesla is the mainline provider of all EV technology to many others, regardless of what the badge on the hood is. And when you look at Tesla, if you are to look at it as a multiple of revenue, if you are to judge them that way, you're not going to like what you see. But if you look at their growth, if you look at how fast they're able to make cars, and you look at how cheaply they're able to produce vehicles, which means they can sell them cheaper, which means they can still make a profit to a larger demographic of our population. I think all of those things are good for Tesla to continue to be a cornerstone player in this EV world that we're all leading ourselves into.
Take notes for this guy. He's dropping gems.
When you stack up what's realistic versus some of the ambitions that we've heard from Elon Musk, do you think some of this hype is a bit overdone?
I wouldn't say that. So I mean, you take what you've been hearing him talk about on the AI front and also the Chinese front, and I think that these go hand in hand right now. He sees the Chinese OEMs like BYD, Geely, NIO, XPeng, they're his main rivals down the road. So these companies, they're not just gunning to be top dogs in EV, they're aiming to be native smart EV companies. So beyond batteries, they're putting a serious effort into cutting edge ADAS systems, infotainment, control systems. All of this is going to be based upon AI. So, Eon's clocked their rise in China. He knows they're eyeing Europe, maybe even the US. And so to keep up, he understands that they need to stay at the forefront of AI.
And at the forefront of AI, how much spending do you think Tesla still needs to do in order to really get its hands around what AI not just could be for its business, but the resources that really need to be layered in at this juncture in order to get that kind of long-term ambition right, Dan?
Well, I mean, again, he's looking at his main competition down the road, and they're throwing money at this, hand over fist. So he's got to keep up as much as possible, and he's not just going up against other OEMs like he would in the U.S. or Europe. He's going after the entire industrial policy of the Chinese state.
Going up against an entire country is not something foreign to Elon Musk. I mean, he sold more battery electric vehicles in the United States than the rest of the competition combined. SpaceX is not only doing more launches than any other company in the world, but they're doing more launches than some countries. It's no surprise that these Chinese auto manufacturers are being supported heavily by the Chinese government. And to that I say, who gives a damn? I'll be putting my money with Tesla every day of the week and twice on Sunday.
You've been positive, and rightly so, for quite some time on the company, on the stock to a certain extent. But I do wonder, after listening to yesterday's call, obviously the competition that has come to the fore, the price cuts, the lack of any real catalyst in 2024, seemingly, where you stand right now.
Let's give Tesla credit where credit's due. They just posted not one, but 3 consecutive great years. They grew 71% in 2020. They grew 51% in 2021. Last year, 19%. Those are great numbers. The challenge is going to be 2024 because they're in between new product offerings. The Model 3, Model Y, phenomenal successes. Model Y today, the largest selling vehicle in the world, gas or electric, stunning. But what about 2024? What they really need to catch up growth-wise with the BYD that grew proportionally 70% last year, delivered 1.6 million vehicles. Tesla's 1.8. They're going to pass Tesla this year for sure. Tesla desperately needs to get that $25,000 model into market by late next year. So for this year, they've got 3 shots on goal here that they're telling analysts. The first is the $25,000 model, but how soon can you get that out? The second is they're clearly a leader in autonomous driving robo-taxis. I think that's at least 3 to 5 years out. The interesting play that few people talk about is the Tesla Energy division did $6 billion this year. It's growing at 54% a year. They're working on being essentially the world's largest utility.
Steve Wesley is correct, but let's take a deeper dive on his 3 shots on goal, as he would say. First, the $25,000 car, Project Redwood, if you have it. I was a bit taken aback when I heard Elon Musk say mid-2025, and given Elon, it very well could be 2026. Of course, it would be better if Tesla were to get that car out as soon as humanly possible. But we don't want to put the cart before the horse. We don't want to send that thing out prematurely, have it cannibalize the Model 3 and Y before we're able to push out 10,000 units per week. That's the goal. So that when this vehicle does come out, it will be readily available to meet the massive demand for a $25,000, $30,000 Tesla. My main focus isn't coming to market quickly. It's coming to market correctly. Second shot on goal, FSD. Nobody knows when this is going to mature into something that's actually going to generate revenue for Tesla. I still feel that by the end of 2024, Tesla will have its first robo-taxi fares generated. The rate of maturation of this product is baffling. Again, the timeline is irrelevant as long as it occurs properly. This year, next year, 5 years from now, as long as it happens. And the third shot on goal is the rapidly growing energy division that no one seems to be talking about. I do believe Drew said next quarter that they will have more specific numbers regarding the energy division. I can't wait to see how they break that down. Just a few years ago, Elon and the team said that the energy division would grow faster than the automobile side of their business. Nobody cared then, and it seems like nobody cares now.
Shares of Tesla down 12% since reporting that big Q4 earnings miss the other day. Warning of a slowdown in vehicle volume growth this year as well. Joining me now at Post 9, Wedbush's analyst Dan Ives. He was with me the other day. Just ahead of that report, he doubled down on his bullish case for that company. So he's back. Welcome back.
Great.
Did you come back today to say I was wrong?
I mean, look, we talked about we were dead wrong in terms of the call into the quarter. I'd almost go and say almost 25 years doing it, probably a top 5 worst call that we've had going into a quarter. We thought, as we talked about, that they'd put the line in the sand for margins. Price cuts are mostly over, and instead, it was a circus show from a conference call. They left the door open for price cuts, didn't give guidance. Musk talked about the 25% in terms of the ownership and the AI, and it went off the rails. And that's why we're here today, basically, looking at it and thinking, like, okay, now what's the step forward? Put out that top 10 list, which we believe could be an inflection point to how we ultimately get higher.
Are you reassessing essentially now everything about this company going forward?
Look, we took it off top picks list because in the near term, from a catalyst perspective, no smoke and mirror. I mean, you don't have the catalyst where you could ultimately say this is going to outperform in the next 30 days, 60 days.
Now, again, we have a classic misdiagnosis of Tesla due to TSLA. If you don't understand what you're saying, you might see cancer. In fact, that's just a mole.
Long-term thesis, look, we remain firmly bullish because it's my view, and it goes back to similar to Netflix in 11 with the streaming, you go back to Jobs in 07 with iPhone. We've been through so many different evolutions of companies. I think view this more as an evolution into the next phase with AI, and I view the mass market vehicles sub $30,000. So we don't throw that out. But no doubt, in the near term, I mean, it's been a disaster this week.
Classic Dan Ives. I hate Tesla in the short term, but long term, multi-trillion-dollar company. I don't get it. If you disagree with what they're doing right now, what makes you think they're going to execute into the future? Apparently, Elon and Tesla, they're doing it wrong. But don't worry, they'll get their act together eventually. Tesla is who they've always been. It's all about the execution. They have lofty goals into the future, But between now and then, there's going to be a lot of misunderstanding, or what I like to call opportunity. The more confusion around Tesla equals more volatility for TSLA. Some people think there's a fair value estimate of 300 plus for Tesla. Some people think it's less than $50 per share. It's this polarity, coupled with my conviction after owning the product, then doing extensive research on where they've been and where I believe they were going. This is the only place I want to put my money. Option stock, whatever. I don't care if the stock takes another 40% dip. My investing practices are not predicated on TSLA. My fair value estimate is rooted solely on the growth and disruptive innovation of Tesla. My option strategy may change, but I'm going to buy more Tesla stock to take advantage of this incredible buying opportunity. In conclusion, a couple days removed from Tesla's disastrous earnings call, despite the misdiagnosis of Tesla's demise due to the erratic indicator of TSLA, it seems that cooler heads are starting to prevail. There may be a sense of urgency, maybe a little bit of despair in some of the longtime bulls. Nobody wants to see TSLA punished, but you gotta take the emotion out of it. Tesla had a record-breaking Q4 and a wonderful 2023 as a whole. Model Y best-selling vehicle, energy division growing like a weed, FSD version 12 sent out to employees and select customers, soon to be rolled out to anyone that might want it. The growth of Optimus, first deliveries of the Cybertruck. There is a lot to like in what's going to be coming in 2024. Your boy Hustle loves a good discount. That's all I have for you today. Be easy.